Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We will talk about the grains markets for right now. Otherwise, we're joining with Ed Usset from the University of Minnesota Twin Cities. Then we'll talk about the commodities markets with Curt Kimmel from agmarkets.net in Bloomington, Illinois. Otherwise, this is your rural news sponsored by AgriGold. This weekend is going to have a tariffs for Canada and Mexico to be hitting the agricultural industry. Then maybe China is next for next couple weeks. Next week will be the cattle con in San Antonio for cattle ranchers and cattle farmers in San Antonio. Finally, in the eggs production, the prices are going to be high because of the bird flu from backyard flock and wild birds. This has been your rural news for this afternoon. This is your commodities markets for this afternoon, sponsored by Kyle Bum Studies, your commodity broker from Glendale Incorporated. The grains markets are closed on a Friday afternoon. It's lower. Corn futures is down at 5 to 10 cents. Soybean futures is down at 3 to 6 cents on the half. Chicago wheat is down at 3 to 4 cents. Let's take a look for the livestock market this afternoon. Cattle is up at 3 to 5 cents. Feed cattle is up at 5 to 4 cents on the half for this afternoon. Lean hogs is down at 9 to 5 cents. This has been your commodities markets for this afternoon. We'll talk about the commodities markets with Curt Kimmel from agmarkets.net in Bloomington, Illinois. Let's discuss about the commodities markets, especially in the beans markets. How concerned for the beans markets?
Well, it's been a dynamic week, news-wise. It affects about all the commodities, actually, this tariff talk. We started with Colombia, then came back and got that kind of resolved short term. Then as we approached the weekend, we saw a little bit of tariff concerns with our great trading partners, Canada and Mexico. So that's kind of the big topic. As far as the bean market goes, the market's kind of shifting from demand here in the U.S. to that southern hemisphere as Brazil's getting a fairly good start on their harvest. We've got 4% of the beans harvested in Brazil. It's quickly going to jump up. The main thing is weather, and it's going to cooperate a little bit better here as we move forward. So we'll see if we'll see that harvest pressure in Brazil. Bean-wise, there was a terminal in the southern hemisphere. I believe it was a train terminal that caught fire. So the logistics or transportation issue is going to be the next thing we talk about in that southern hemisphere as they try to get some harvest activity complete. It's kind of interesting visiting with or listening to a producer in that southern hemisphere. It said early bean yields are fairly good. Of course, on some of these yields, they're mainly good in test plots. It's kind of like here in the upper Midwest, where if you're a seed salesman, all the good yields are right there. So we'll see if those yields continue. As you know, the January monthly supply demand report showed that southern hemisphere fairly strong yields. Brazilian bean yields has been as high as 177, 170. But we're seeing, some of these analysts backing off on those higher expectations, and with the idea that we're still going to have a record production in the Southern Hemisphere, but it might not be as large as some of them would project. The other thing about the bee market is, as we've seen in the national news, is bird flu. And hopefully this bird flu gets under control, because poultry is one of our largest consumers of meal. And we want to keep that market intact here, Caesar.
Do you have any concerns about these issues for next couple weeks with China? Kurt.
China is the next tariff talk. Today we saw tariff talk, Canada, Mexico, supposed to take February 1. Then there was some talk that it would be March 1. Then it's back to February 1. But, it's 25%. And where I'm going with China is we're seeing them on the tariff list, and it's 10% with them. So a little bit down the road, we need to see how this tariff news unfolds. China has rejected some South American products due to sand being in the meal from Argentina, and also Brazilian beans maybe having some problems or issue with them. So China's looking at needing some beans from the Southern Hemisphere. Boats are lining up in the Southern Hemisphere, so they might be playing the quality game here. So we'll see how that unfolds here. China is the big buyer in beans, and hopefully we won't see them get in a trade dispute with the new administration.
Of course, Kurt. It's a secondary story about the drought on this crop in Brazil. What is your thoughts on the corn production from Brazil?
Yeah, it's Brazilian corn is expected to be 127 million metric tons. A year ago, we were 122, so it's still above last year. Same thing in Argentina, 51 versus 50. So the Brazil was a little too wet to start with. They've actually needed to dry out in the northern part. Southern Brazil's been a little dry, and they received moisture late on it. So that Brazilian forecast has been a mixed bag, but overall, the average on some of these analysts out of the Southern Hemisphere feel we're still going to have a fairly good crop in Brazil. The key, of course, is Argentina. They're a little later, and they've experienced a little bit more of a drought or weather concern versus Brazil, Caesar.
How about in Argentina, Kurt?
Yeah, Argentina is later. So hopefully these later rains would help those producers as far as production goes. As a North American farmer up here, we'd like to see them be the one experiencing some weather problems. But it's a situation where 51 million metric tons is ample supply. We'll see how these yields turn out here as they start to rev up harvest here in a few weeks in Argentina, Caesar.
Do you follow the livestock markets on today? What is your thoughts on that?
Most of the action continues to be in the cattle complex. The significance of the cattle complex is we've seen the market move to all-time highs. It's just been like a bottle rocket at times here, even the feeder market being very, very strong. We're still dealing with overall tight numbers. Some of the edge has been taken off with some meat imports out of the southern hemisphere, particularly beef. But overall consumption remains fairly strong. The consumer's got an appetite for beef. Some of this substitute stuff is not really going very well. We're seeing some strong domestic consumption of beef, and with tight supplies, We feel the market can hang in there quite well here as we move forward. It won't be long. Weather cooperates. We'll be in cookout season. We'll see how these cookout features go as we move down the road. Hogs has kind of been a follower in through here. They continue to hang in there. The thing on the livestock side is we don't want the grain market to get too high to cut into some of these returns on, especially the cattle. If you buy these high price feeders, you need some fairly cheap corn and meal or DGDs to feed them to come out ahead. The margins are fairly tight, but it's been a bull market in the cattle complex, Caesar.
Mm, 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 mm.
Do you have any concerns about the prices still in the corn markets because the prices are currently high on the feed?
Yeah, ever since last fall there, particularly after the January crop report, grain corn price has been real strong, a lot stronger than most anticipated. If you go back when we started the supply demand balance sheet on this crop we just harvested here last fall, we had projections of 2.2, 2.3 billion bushel carryout. And we were above $5, but as we went through the growing season into fall, the carryout kept getting lower, lower, lower. Then we saw the market go lower and lower, lower. Then all of a sudden, harvest is over with, and we got a little vacuum going up. Now, corn carryout's 1.5 billion bushels, so that's relatively tight. So we might be looking at $5 corn. The thing that's going to give the corn market the big news is we get into the growing season to see what type of weather pattern we have here in the upper Midwest, Caesar.
Do you have any final thoughts on the grains markets for today from the board on today?
Yeah, just watching market action it's getting more two-sided. Some fairly good price swings in through here. We're going to see volatility continue to pick up as we move forward here. Just a lot of uncertainty in front of us. We don't know how this tariff situation is going to unfold in through here. So volatility's picking up. There's price risk up, price risk down. And also on this tariff thing, one thing we got to think about too is uh, we buy a lot of products like from Canada, potash and so forth, and crude oil. And so this world trade situation is going to add volatility to the grain market. So if you don't like the market, wait a little bit. It's going to be different in a few minutes, Caesar.
Thanks, Kurt.
Well, you're welcome. It's a
This
great.
is Kurt Kimmel from agmarkets.net on back roads of Illinois. We will talk about the grains markets for right now. Otherwise, we're joining with Ed Usset from the University of Minnesota Twin Cities. Hey, Ed, how are things with the grains markets for this morning as we are talking about it for this morning as record for this?
Well, the markets today, for the month of January, they've been very good. Today, we've peeled back a little bit in corn and wheat, but the March corn contract is currently trading around 483. Now, that's off from its high a couple days ago of 497, but that is 483. Caesar is 80 cents off the lows we set back in late August at 403. So an 80-cent rally is that's good.
Do you have any concerns about that?
Well, I've been saying for months that I'm looking for a rally to sell and are looking for rallies to sell. And I think in the world of corn, we've got that rally right now. I hesitated before the new year, and I think people are selling corn and soybeans. And I say that because the basis has backed off for both corn and soybeans in the nearby markets. That indicates that the buyers are able to get to buy corn and soybeans relatively easily.
If farmers are finding out about their balance sheet for the spring?
Well, I travel and talk with financial people, and it's a concern for corn and soybean and wheat growers, those balance sheets. And as we look ahead to 2025 and where the prices are, currently it's going to be a tough year in the year ahead, and a lot of hard decisions will have to be made uh, on what commodities to grow. I suspect, Caesar, in the year ahead, that both corn and soybean prices are not good, but I think the soybean situation is more difficult than corn. I think we're going to see more corn acres grown at the expense of soybeans, and probably more than most of us expect. That change will be bigger than we expect.
How is the inputs cost like fertilizer, seeds for the spring?
Well, the difficult part, without getting specific, just big picture, uh, I know that prices are way down from a year ago, yet I've got smart people at the U that I work with, and we have real farms in our FinBin database. And I am being assured, excuse me, I am being assured that despite the lower prices we see this year from last year, that the cost of producing corn and soybeans has not come down. And in fact, I'm assuming the same break-even cost of production in 2025 as I did in 2024. Kind of surprising. Usually, when prices come down as they have over the last year, year and a half, there is pressure to bring down input uh, costs, and never as much as the decline in grain prices, but there's pressure to come down. But I am being assured that no, the cost of producing grain in 2025 will be very much in line and similar to the costs of a year ago.
Do you think about the Brazilian is going to be bigger than before?
Well, they are projecting a bigger crop than a year ago. And yes, I do. But Caesar, I'm always reluctant to put a number on it. I'm not a crop scout. I'm not down there measuring things and seeing it with my own eye. So yes, it's going to be a bigger crop, unfortunately.
Do you have any final thoughts on the corn production from the World Supply and Demand Report on February?
Well, we had a big surprise in January. Uh, as recently as October of last year, the October WASDE report, we had carryouts in corn in the U.S. at 2 billion bushels plus. And the latest report in January, we've carved that down to 1.5 billion. That's a big change in the carryout outlook for the corn market in the U.S. Um, there's reason why the March contract is up 80 cents off its lows, and that's constructive. That was a constructive change for the corn market. Unfortunately, the soybean market is still weighed down by heavy stocks, even though they aren't as heavy as we thought they were. Um, I'll stick with it, Caesar. I've been saying look for rallies to sell, and in the last couple of weeks, I've been telling people, that rally you've been looking for, I think it's here. Get something done.
How about the planting intention report on March?
Not sure. The big overriding question in the planning intentions report is how will acres shift between corn and soybeans? I've seen some people talking about a 2 to 3 million acre shift away from soybeans into corn. And just my own sense, uh, I think your average corn belt producer is more confident with their corn yields than they are with soybean yields. And prices being the way they are, it wouldn't surprise me at all if the shift away from soybeans and into corn is larger than 3 million acres.
Thanks, Ed. I enjoyed our conversation for today.
Caesar, I always enjoy touching base with you. Good luck to you here in the next few weeks.
This is Ed Usset from the University of Minnesota Twin Cities on back roads of Illinois. Thanks to Ed Usset from the University of Minnesota and Kurt Kimmel from agmarkets.net. This has been Back Roads of Illinois. I'm Cesar Delgado. You have a great weekend.